Welcome to the second part of investment ideas and how I basically come up with my investment ideas. This is kind of my favorite part, and I'm hoping it's going to be your favorite as well, enough to like, subscribe, and convince someone else to subscribe as well. But the reason why I like this one so much is because the barriers to entry are not as high as the first one. The interesting thing about how I get the ideas for this one is it's actually having to do with what people do for a living. And in this case, it's having to do with the marketing world. Way back in the day, when I had to study certain tech industries, I also had to study how some of the ad agencies worked. The quickest explanation I can give you is there's a brand that wants to advertise their products to sell. They go to an ad agency and says that, hey, I want a campaign done where I want to sell my product to males ages 18 to 35 with an income of at least 50K in North America. The ad agency will say, well, it's going to take at least, I don't know, $10 million for us to pull off this ad campaign. Brand says yes, gives them $10 million, and then they take the $10 million and go to whatever platform. That's your Facebooks, your YouTubes, your Twitters, et cetera, right? And they would pay money to start showing the brand's ads on that platform. Now, this is the important details of it. In that example, the brand makes money because customers are aware of their brand and they go to buy their products, right? The platform is happy because the ad agency pays them to show these ads to people in their target demographic. But where does the ad agency make their money? The answer to that is, remember how I said the ad agency asked for $10 million to pull off that campaign? 10% of all ad spend is going back to the ad agency, and that's how they make their money. Now, here's the funny part about that industry, and I'm laying this groundwork so it makes a lot more sense later. But let's say they only spend $8 million, so they only make $800,000, right? What this signals to the brand is that, oh, instead of us giving you $10 million, you can just get by with $8 million or whatever, right? So the next budget request season, they're only going to give you $8 million. So you see where this goes? They're going to make less money, so they have more incentive to spend all of it. Not only that, but to request more the subsequent year. One last detail I'm going to go into before I go into my example is that there are 4 quarters in a year. Quarter 1, 2, 3, and 4. Now, most of quarter 1 and 2 are not that ad spend heavy and so forth, whatever, right? It's more so in quarter 3 and 4, and there's a specific reason for that. It's because it's the lead up into Christmas where people are actually more willing to spend money, and that's simply it. Okay, so my example. Back in 2020, when we were all locked inside, I noticed something peculiar. I wasn't seeing a lot of ads on the stuff that I was watching, and I kept seeing, well, the biggest hint was a lot of the YouTubers I watched were complaining about low CPMs outside of the normal low CPMs around quarter 1, quarter 2. Now, how you go about getting this information is up to you. I just asked a friend, and he said that most of the advertisers were not willing to sponsor him because they were just being stingy with their budget because they didn't know, whatever, right? So at this point, take in consideration what I told you before. All these ad agencies are given a budget. They had not spent a single dime yet. Now, we're heading into Q3, Q4, which is the typical ad spend season. So they have to spend their entire budget before the season's end, or risk basically making less money the subsequent year because they didn't spend their entire ad budget. You can find an ad agency or one of their platforms through a quick Google search and then go through their balance sheet through Edgar. It's usually called like ad spend or ad revenue. And the one I eventually settled upon, I came across by accident because I found out that the CEO bought a ton of shares in his own company, which is not out of the ordinary or whatever, right? But I decided to dig deeper into this company, and I found out that they had the broadcast rights to the NBA, which is coincidentally the first live sporting event to come back. This was 2020, post-lockdown. So I made the educated guess, given what I told you about the advertisers, where they want to spend their entire ad budget or risk, getting a lower budget the subsequent year. So they're losing out on, future revenue. So because this is also sports, it draws a lot of eyes, and it's the first sporting event to come back. That's, in my opinion at the time, was an alley-oop. I'm not going to name the company or how it turned out. You're going to have to subscribe to find that out, obviously, but I'm not going to tell you. You could probably figure it out using some of the things I've said already. But the point being is that I got an investment idea through something I knew. Now, I have to also talk about the risk of this as well. Now, one of the most obvious downside to at least my method was that my source could have just had bad information, or they could have just been that one person that no one wanted to work with that year or ever liked it. That was the year they planned to cut them off, etc., right? The second thing is that personal biases exist. You might not like a certain company because of their CEO, someone worked there that you heavily disliked or their customer service slighted you in some sort of way. That experience might push you to a competing company, but at the end of the day, none of that matters because it's whoever the brand, or in this case the ad agency, chooses to give their money to. This last one is a very big risk, and the only reason I put it last is because people only ever remember the first and last things I say, so I'm hoping you kind of pay attention to this one because it's really important, and that is be aware of conflicts of interest. Check with your own lawyer on what you can and can't do. When I asked my friend, he's not a CEO, he's not a VP, he's not a C-suite executive, he didn't work for any of these companies. He was more of an independent third-party contractor, and all he told me to do was to go look at, because I live in a very big TV commercial town, is go look at the film permits being issued, and he said that there hasn't been a lot of permits issued, and that stuff's public. But had he been a high-level executive within that company, and he told me that before they actually put out any of their public releases, then I would not be able to not only touch that company, I wouldn't be able to touch any of the companies within that sector. I'm pretty sure it's floating online somewhere, but Bill Gates and Warren Buffett are friends, and I remember an interview where Buffett gave where he said that he is not allowed to invest in, I believe, Microsoft, because he says it's an attractive stock, but because he's direct friends with Bill Gates, he's privy to a lot of non-public information. Therefore, he's not allowed to invest directly in that company. As I said in the beginning, this is my favorite because I get to learn a little bit more about how the world works around me. And in the next one, I'm going to talk about something that's a little bit more crowdsourced, and I'm going to ask you to please subscribe, or if you're already subscribed, convince someone else to subscribe to me. I'm putting myself through the torture of the next one for your education. And just remember, just because you're a day trader doesn't mean you have to trade every single day, but I will see you in the next video.